Hi, this is Richard Campo from Rose Capital Partners. I've put this video together just to talk through some key things you might want to think about if you're using foreign income when looking to obtain a mortgage in the UK. So firstly, we'll look at a definition, and that might be slightly broader than it might first seem. Secondly, we'll look at then the assessment, which will then drive on to thirdly, ultimately how much of a mortgage you might be offered off the back of that. So firstly, the definition, in many intents and purposes, it is very simple. It is anything not paid in sterling. So if you have income from abroad or if it's paid from an employer and it's simply not in sterling, then you do fall into this category. Now, where this catches more people than you might think is if your bonus is paid, for example, say in dollars. That's quite common. A lot of people work for American employers here in the UK. So I just wanted to sort of touch on that very briefly in terms of the definition. So you might have your bonus nominated in dollars, but as long as it's paid in sterling, then this doesn't apply. You're absolutely fine. If you do have your bonus nominated and paid in dollars, then this assessment will apply to you. So even if you're employed and you sort of think, well, actually my bonuses all come through cash, it's not going to be a problem. This does come up from time to time. So like I say, the definition is slightly broader than what you've seen. Anything that's very simply, you're receiving income from abroad, then fine. That's very clearly in this territory. So secondly then, is in terms of the assessment. So what most banks offer is a loan of around about 4.5 to maybe 5.5 times your income. That's where most banks sort of sit in terms of what they'll offer you. What's really, really important when you have non-sterling income is what's often applied is something called a haircut. So let's say to cover things like currency fluctuations. So as we've seen, particularly through the course of Brexit and since then as well, currency markets have moved around a lot more than they have done over previous years. So what a bank will do is they'll say, okay, we'll work out your income in whatever the home currency that's in, convert it into sterling, and then they'll knock off a further between 10 and 20% to account for those currency fluctuations. So typically it's around 15%, but again, it does differ from bank to bank. Very, very important you apply that haircut because that might have a driver on what sort of loan you're offered and if that gets you to where you want to get to. Again, as ever, the risk warning is that not all banks take this approach, but most do. And it's really important you understand at the front end of the process. So lastly then, how that translates into a mortgage. So let's use a really simple example. Let's say you get an income of £100,000 in dollars. So the first thing a bank will do is convert it back into sterling. So at the moment, broadly, it's about 1.5 per dollar. So that will be done at the time you apply. So whatever the home currency is and whether it's sterling, so apply the right calculation. But for the purposes of this, we'll take £100,000 in dollars, put that into sterling, so you divide that by 1.4, I believe that is just over £71,000. And then if you apply that haircut of, say, 15%, that takes you down to £60,000. So £100,000 of dollars might translate in terms of a mortgage of £60,000 worth of income, which I know isn't necessarily what you receive, but that's how banks assess it. And then they'll apply that multiple, typically around 4.5 times income. So that means on £100,000 worth of dollars, you might be offered a mortgage of around about £273,000 of a mortgage. Now, as I've touched on a few times, banks do differ. Certainly, as you can see, if a bank's going to offer you a larger multiple and take less of a haircut, that could have quite a big impact on the loan that you're offered. So if you do have any income that's non-sterling, strongly recommend you speak to a broker right at the outset, because certain banks also don't include certain currencies as well. So there'll be sort of no-go areas down to jurisdiction and all sorts of reasons around that as well, which is a very, very long video, which I won't get into. But anything that's non-sterling, talk to a broker or a qualified advisor. They'll then navigate the path forward so that you get the right outcome at the end, because you don't want to be halfway through an application, it get declined or end up with the loan amount being far less than what you need. It's a very stressful experience to go through, so please do talk to a broker. Certainly anyone on the team here can help you through that and make sure you get the right outcome with as little stress as possible.